What advice would you give an aspiring investor 6 to 12 months behind you?
Don't give up. Whatever you do, just keep putting the hours. Don't compare yourself with anybody else. Your pace is your pace. And do the underwriting, do the calling, and let people know that you're doing this. So when you have to raise the capital, they already know.
I'm Brian Briscoe, host of the Diary of an Apartment Investor podcast. And this is a first deal episode where we walk through what it takes for someone to find, fund, and close on their first apartment complex. And if you're an aspiring investor yourself, you are probably trying to do exactly the same thing. So before we get to this episode, make sure you hit the subscribe button below and the little notification bell to make sure you get notified every single time we post a new episode. And now, enjoy the show. Welcome to the Diary of an Apartment Investor podcast. I'm your host, Brian Briscoe. I am excited for today's show. We've got an amazing person on the line with us today talking about a first deal. It's one of our first deal series. We've got Hans Seelinger with us, who's once again, like I said, very, very interesting. We're going to love this episode. So Hans, welcome to the show.
Thank you for having me.
Yeah, thanks a lot. And thanks for coming on the show. And oh, by the way, for the listeners, Hans and I met, I think 3 weeks ago at a big conference and really enjoyed my conversation with him. That's why I think this is going to be a great, great episode. So Hans, start us off by telling us a little bit about yourself.
Well, first of all, thank you. And hello to everybody who's listening today. Yeah, well, basically, I'm original from Venezuela. I was born in Venezuela, born and raised there. My father's German. That's why I have a German name. So I was raised in a bicultural house. I studied business administration, and my family in Venezuela, they had a business of sports equipment, and we were distributing Puma, sports brand. I don't know if you heard in the news, but Venezuela is not doing very well. So I moved to the States 9 years ago, and I had to reinvent myself. And in that process, I was, what's a good thing to start with? So I wanted to reply the business that we were doing in Venezuela. Didn't work out the way I wanted. So I said, I know we have some real estate, and that thing has been always stable and always been there. So I started investing in real estate. And that's how I got to this. I enrolled first in a course with Grant Cardone to understand family is. And with that, I bought a 12-plex for myself and had all the money that I had and borrowed some from my sister and my mom. And I said, hey, let's buy this together. And then I was always seeing about thousands of units being bought. And I said, how can you do that? How can you get to those levels? And I'm saying, I need to work another 50 years to be able to buy another, I don't know, 20 or 40 units. Then I about syndication and how you can buy these deals with investors. And then when it clicked, and I said, "This is what I got to do." Yeah, that was a year ago when I found out about this, and I enrolled in an education with a company called Ari Mentor, with Dave Lindahl, and I mean, it's been a blessing.
Yeah, absolutely. Yeah, I remember I bought a couple of single family homes, and it was, scraping every penny I had together to be able to buy them. And then it was just like, it's going to take exactly the same thing you said. It's going to take me a couple of years to, have another down payment for the next property. I guess I'll put things on hold for a second. But same thing, when I heard about syndications, it was just like, there was a little bit of a delay for me because I was just like, who's going to give me money to invest? And that's kind of the attitude. But eventually I figured it out. But so speaking about figuring it out, what were some of the challenges you had getting started?
Well, of course, first learning how to underwrite a deal. I think that was a challenge because it's a bunch of numbers. And even though I'm a numbers person and I understand how to analyze a business, it's a lot of details that you need to master in order to underwrite a deal properly. But I think I've been blessed that I got to meet so many interesting people in the last year and a half. And I met one of my partners, which is Hitomi. And she's just an amazing underwriter, and she just really, really taught us how to get to those really details. And I really have to thank her a lot because she's amazing. She really taught me a lot, and she's part of our deal, of course, part of the team.
Yeah. Underwriting, man, it's something that I thought it was going to be easy. I've got 2 degrees in math, and so I've always been good at numbers, but it still took me a long time to feel comfortable underwriting properties, and making sure that every I was dotted, every T was crossed and whatnot. But yeah, that's an important skill to have. And you bring up a good point. I mean, you were talking about, you learning how to underwrite, but bringing somebody on the team that can underwrite a little bit better than you is a smart play. So one question before we start getting more into the deal, a question that I really like to ask about motivation and kind of, peer into your soul a little bit, I guess. But, what's your big burning why?
I'm a father. I have two kids. I have a daughter. She's 8 years old, and I have a son. He's 11 years old. I moved to this country, and I had to restart from scratch. And I said, I have a commitment to myself and to my family to build something with a legacy, something that's,
Yeah.
people say and look back and say, wow, this guy built something from scratch, right? So that was my burning why was I need to be able to show my kids that I can do it, right? Because I was a little bit beat up, let's put it like that, after I came to the country and things didn't work out the way I wanted.
Yeah.
It was like, oh man. So when I said, I'm going to do this, I put my mind to it. And I said, my kids need to see a good role model. My wife needs to be proud of me because she said, yeah, he's making it. So those are my big whys.
Yeah. I love that why. It's like you see your kids every day and you want to be there for them. You want to, it's something that I think drives me a lot. Early on, my kids still are my why for a large part, but early on it was, making sure that my kids had a better life. It was try to keep them from moving every 2 to 3 years. I was military, but that was my big burning why first. Let's just provide a little more stability for the kids. And it was all about, the kids and the family. So anyway, thanks for sharing that. I appreciate that. Now, moving back to the real estate stuff, we talked about your challenges already, and you kind of talked about, the education. I'm going to ask you about the education portion a little deeper. You mentioned RE Mentor, but let's talk specifically about, when you decided to start the education process, what really helped, what didn't, and go from there.
Yeah, well, I think it's important in any business that you want to do is to have someone who is a little bit further in the process, right? So I mean, you can figure out everything by your own, but how much time is it going to take you until you figure it out, right?
Yeah.
So to have everything on a program that it's already set up in a way that you can get nugget by nugget and build up the information, because maybe if you get too advanced underwriting, maybe you just get lost. So they put it in small pieces of information that you can digest and then build up from there. I think that was very crucial. And having a coach. I think that was very important. We had every 2 weeks a call with a coach that was always, giving us some advice, what to do, how to talk to brokers, how to get the fear, because when you're making the first calls, you're not knowledgeable about the real estate language, because you might speak English, but real estate is a different language, right? There's service coverage ratio and a loan to value, loan to cost, and all those things. And you're talking to a broker and they're spilling out a lot of things, and you don't know what they're meaning, and so it's a bit challenging. But they make it very easy for you to start understanding that language and get rid of that fear of those first calls. When I guess my first calls, I was there on the phone, and I guess the broker must have said, "Who is this idiot?" Right?
When I started making my first calls to brokers, I didn't know all the terminology. And I remember every time I'd just get a little further on the call, they'd start asking me about, cap rate. I'm like, crap, I don't know what a cap rate is, and so after that call, I'd go look up cap rate. I'm like, okay, next call, I'm prepared to answer the cap rate question. And they'd ask me a different question. Who's your key principal? I don't know what that is, and then, so for me, it was a very much an iterative process. And that was kind of what led me to get coaching as well, is because, I realized there's probably 1,000 things to know. If I'm learning one thing on every call, it's going to take me a really, really long time. And you mentioned the, being able to put information in order and in a, logical manner, that's big too. I mean, it's a lot. You can learn a lot from podcasts, but it's a lot easier if somebody just organizes it really, really well for you. Well, cool. Well, let's talk deal specific stuff. We're talking about this 100 unit you closed in Lubbock, Texas. Talk to us first about how you found it.
Well, basically, I was looking for deals everywhere. I was calling brokers, calling property management companies. And I believe that's a very important thing that for anybody that's new is property management companies. They have a lot of knowledge about market and properties. So I was calling one of the property managers to go tour one of my properties that I was submitting an LOI. And they came back and they say, run from this deal. There was some things that were not disclosed on the OM. And I was happy that they were able to find that out for me. And then they said, this is not a good deal. So I decided not to pursue it.
Mhm.
And then a couple of days later, the property management company called me back and they say, hey, I know we couldn't do anything on this one, but I know that there's a deal coming up from a broker in Lubbock. Are you interested in that? I said, yeah, of course. So they gave the number of the broker. I called the broker, and the broker said, this deal is not in the market yet. I have nothing to show you. And I said, okay, but I know this property management.
Perfect, though. That's the perfect spot to come into the deal because you're the first person. Yes.
Exactly. So he was like, I'm still putting the OM together and putting the numbers together. When I have it, I'll give you a call. 2 weeks passed. I called him and said, hey, not ready yet. So I was like calling every week. So he was pretty aware of me. So when he sent me the information, I did the underwriting and he sent him an offer. And of course, it was too low.
Yep.
He put the property then to the market. He said, I'm going to put it on the market. And in that moment, when he put it to the market and I had submitted an offer that was too low, he said, you got to come a little bit up. That's when I talked to my sponsor, to Rob, and I involved him in the process. And we decided then to make a counter, right? And it was I think this is very, very interesting because all the things that they tell you that could happen in a deal actually happened. So
get them all out on the first deal, right? So you never have to deal with them again.
We're not the highest offer. It was, I was always communicating with the broker, and he was saying, no, that price won't be. They were asking $8 million. That was their asking price, or 8.1. And I put an offer for 6.9, and they said, no way. So I went up a little bit, and then back and forth negotiation, we ended up settling for a 7.5. And at the end, we had to do some retrading because there were some things that we found out, and we closed at 7.2. But the funny thing was they had an offer for 7.8. They decided to go with us. And the broker told me, I said, I'm pushing you with the seller because I feel that the communication with you is going to be much easier than with the other group that's offering. So, and at the end, I was able to, after we closed, which is not usual, I went to dinner with the sellers because we met in Lubbock, and then we had dinner actually with a leasing manager. It was a very, very nice thing how we closed the process because it was a very smooth process to close. And they told me the same thing. They say, hey, the broker said, even though we had $200,000 more than your offer or $300,000, we decided to go with you because the broker said you would be easier to deal with. I think that's very important for everybody who's listening. Be good to the broker. Talk nicely. If they ask you something, just respond. What the broker told me was the other group was a little bit aggressive in their answers or their bad mood. Let's put it like that.
Yeah. And that is absolutely key. And I mean, typically I've known this for a while, when the broker conveys offers to, I mean, I'm on the sales side as well. I've owned, 12 properties now, but on the sales side, the broker is going to convey kind of the strength of the team as well. It's not just here's the number, but the broker is going to convey to the seller a little bit more like, hey, these guys are tire kickers, or hey, these guys are, legit, type stuff. But there's more than just a number, more than just what's printed on the LOI that happens in that conversation. So if you can get the broker on your side and get the broker to fight for you, you're more likely to win deals. So yeah, keep that relationship. Good tip there. All right. So you got the deal 7.5 retraded down to 7.2. Let's talk about the retrades. What items did you go back to the seller and ask for credits for?
Well, basically it was something with the ACs. They had some HVAC and some of them were a little bit dated. And once we did the inspection, some of them needed to be replaced. So we went back to the broker and we said, hey, we found out this is what's going on. And it was very easy. It was a very smooth transaction. We said, this is what we sent some 3 companies to do a bid on how much it would cost to repair or replace what needed to be replaced. And we decided to go with one of them and say, well, this is what's going to cost. So negotiate. At the end, we figured out something half and half.
Yep.
So they were nice to do it to make the process easy. We actually closed 11 days earlier than what we had in the contract. So cool process.
Cool. Yeah. 11 days early. That's a good thing too. Always try to close early. In my experience, the lender is always the last one that's ready to close. But speaking of lender, let's talk about the loan on this one.
Yeah. We had an assumable loan. They still have $3.6 million on the loan at 4.23%, still with almost 2 years of interest only, and
Nice.
still 9 years of term. So we said, well, let's assume that loan. That's a good loan. So immediately I asked the broker if I could get communication with the lender, and immediately gave me communication. I started talking to them, and then I said, okay, we would like to get a supplemental as high as we can to increase that loan to value, because with that loan we were about a 50% loan to value. And we got a supplemental to get to 65% loan to value. So it was a little bit on a challenging time last year. And the last quarter, interest rates were going
Yes,
crazy.
it was. Yeah.
We changed like 5 times during the process, but at the end, we got that for 7.3 was the final number for the supplementals. That they tend to be a little bit higher on the interest rates, but they match the conditions of the underlying loan, right?
The same term, same everything.
Everything, yes, same lender. And the combined interest rate or the merged interest rate is about 5%. So I think it's a pretty good deal for the current interest rates.
Yeah, where rates are now, if you can find a deal with assumable debt, I think that's a good play. I looked at one last weekend actually that has a loan that expires in 2031. So let's see, it's 2023. It's got 8 years still on the term. I think it was a 12-year loan when they got it, but long story short, it's at a 3-point-something%. So if rates come back down to where they're low again, I mean, great. But if they never do, if we hold that property for 4 years, it's still going to have 4 years on its term, and the next buyer can assume it. So there's lots of good reasons for that. And I think if you get that assumable loan, especially when you have longer terms on the note, and you said you had 8 left on yours? 9. Yeah.
9 years. Yeah, 9 years.
So you could probably have the next buyer assume that loan later on if the numbers work out. But of course, the LTV is going to hopefully be extremely low at that time, but we'll see. All right. So talked about getting the deal under contract. Let's talk about the team that came together. You mentioned you had a sponsor, loan guarantor, Rob Roselle, who incidentally has been on this podcast before. But let's talk about the rest of the team.
Yes. Well, first of all, Rob was the key sponsor. Rob and his wife Claudia, amazing people. I just have to thank them 1,000 times, and that's not enough. They've been very, very, very nice. They introduced us to Hitomi as the underwriter. Said let's use her to double check that we did everything correct. So that was an amazing, amazing partner that we got there with Hitomi. And when I started the education, I partnered up with another person just to split the cost, right? And at the end, I like the way we worked together. We were pushing each other. And I think that's very important when you're starting this journey. It could be sometimes a lonely journey, right? When you're sometimes at night looking at a property, or early in the morning, or when you're at noon, you have somebody to push you and say, hey, how many deals did you underwrite today? You're like, none. Hey, come on.
So accountability partner, it really helps.
Yes. So Luis, who is another partner, he was, let's put it like that, accountability partner. That's how we started. And then during the process, we said, hey, let's just partner together and do these deals together, because we have this good work ethic, and we're both pushing. So at the end of the day, he joined also the team, and he was also a very important part of the team as well. So that's the whole team.
Awesome. Yeah. So something that, obviously every syndicator has to do, and people kind of fear this more than anything else, is the capital raise. All right. Yes. So you're telling me you were about 65% LTV. So you probably had, ballpark $2.5-3 million to raise. Tell us about the capital raise.
Yeah, plus the CapEx items and some things that we had on the plan for increasing the rents and everything. We had to raise $3.6 million.
3.6. Okay. So you had a significant CapEx budget there too.
Yes.
Nice. Okay. So how did that go for you?
Well, I got to tell you, for me, I think it was the biggest surprise of all was the capital raising. I thought it was going to be easier right? So I just took every advice everybody told me. I just started with my phone and starting from A. So A person. Hey, I'm doing this because the thing was, people don't know me as a real estate investor. People know me as the sports guide. So that's the guy from Venezuela who was very successful there, but they don't know me as a real estate investor. So when you call them, say, hey, I got this deal. And they're like, what happened with the shoes?
Yeah. And I got the same question was, aren't you still active duty? Wait. I thought you were a Marine. What are you talking about, apartments? Yeah. Same thing happened to me. It happens with everybody.
So you have a short period of time to raise that money. And I was more focused on finding a deal than to raise capital or letting people know what I was doing. So if I would give an advice to someone is, hey, start doing both. Tell people what you're doing. So when the deal actually comes, you don't have to start explaining them from scratch what you're doing and what is an apartment. What is that? Yeah, it's 100 units. What, did you win the lotto? You're like, no, you're going to help me.
No, you're going to help. Yeah, you're going to put in 50,000. I'm going to put in 50,000. He's going to put it. Yeah, that's something that I had a hard time with too with our first capital raise. I mean, just getting people to see me as Brian, the real estate investor. I think I'm at the point right now where people see me as Brian, the real estate guy, the multifamily guy, but man, it took a while. I think social media really helps with that. That's a place where you can just start posting things and people will eventually see. But that's one way. There's other ways of doing it. But you ended up getting to your 3.6 million, and you closed obviously because you're operating the property right now. You mentioned that everything that people warned you about happened. But let's talk about the closing. Did you have what big hitches? What big delays did you have getting the property closed?
To be quite honest, the closing was pretty smooth, right?
Nice.
But there were always lender always required something new. And, but I think that the biggest thing is always what the lender is asking, right? So I think it's crucial when you have a good sponsor that has good relations with attorneys and everything to get everything, done quickly. So you have all the documents as fast as possible.
Yep.
And I think the secret for us what actually helped to close this property early was the lender was requiring a document at 4 p.m. and at 6 p.m. they had it. Right? It was fast. Or latest next day, 7 a.m., it was there on their desk. So everything was done very, very quickly. We worked very, very diligently. Of course, when you get to retrade something, to do it in a fair way so that you're not hurting the relationship with the seller and with the broker, because we want to have good relationship with the broker so that he will give us another deal in the future. So we don't want them to feel, oh, why did I give this deal to this person, right? So that retraining, we really used very, delicate touches to make it as fair as possible. So, hey, these are the bids. Bring your guys, bring your people. So that took some time. So we said, let's just, we don't want to make any profit on it. We just want to be fair that this needs to be looked at, and let's just find a good way to do it.
Yeah.
I think those were the things. But then, of course, with capital raising, it was you need to close at that day, and that certain day you need to have some amount of money there, or else everything you did is going down.
Just wasted time is what it is. Yeah.
Yes, we had that. Of course, Rob and his wife, they have amazing connections, and without them, it would have not been possible to do it if they hadn't jumped in. I think everybody had some expectations of how many millions we're going to raise. It was harder, and we're like, oh, we're getting close to the thing. How much have you raised? Like, I'm at the 10% of my goal.
Yeah. And that's typical first time people raise capital is you think, okay, I've got this many people who all invest, and, a lot of them, some of them do, a lot of them don't. I called my initial group of people that I thought would invest, and I got 0 investors out of that. So I had to, start pounding the pavement. But yeah, that's very, very typical. And having somebody there with experience is big, to be able to, leverage that Rolodex and go from there. So very briefly, looking at the clock, we are about out of time. Very briefly, how's it gone since closing?
Great. The takeover process was very, very, very good. I was there personally to take over the property. And since then, with the property management company, we've been implementing our plan. We are increasing the rents as we had in our business plan.
Yep.
Of course, some vacancies. We had that also in our underwriting calculated because we knew that there were some people that were paying $400 or $500 in a market where those units are being rented for
Mhm.
850, 900. So of course, when you're starting to do those renewals, those people just won't catch up. So you have to let them go, right?
Mhm.
But new people are coming in. Traffic is amazing, and up till now, everything has been a smooth process.
Yeah.
Everything is working as it should.
Yeah, good, good, good. Yeah, the experience I've had with people who are way under market rent, most of them actually stay. Even if you're boosting rent up, because there's usually nothing else available at the rent point that they were paying. So yeah, we've had a lot of success. I mean, the fact that the previous owner didn't, charge market rent doesn't bother it. It did maybe a little bit at first, but we charge market rents on our apartments. And so if we come in and somebody's a couple $100 behind market rent, we're going to charge them market rent. Like I said, what we found is most people end up paying the market rent, and most people end up admitting that I knew this day would come. Yeah. So we've been fairly successful at that.
One thing that our property manager has done very good is some of the people that are actually staying, we're just doing some minor things to the units, right? Putting new light fixtures or doing something to make the unit a little bit better. And they're saying, okay, well, I'll take the $150 bump. Okay,
Yeah.
because it's easier that than to move, because how much is it going to cost them to move, find a new apartment? And it's
Yeah. And when they find a new apartment, it's going to be the same price that you're offering it at, because you're
yeah.
market rates. So, all right, last three questions that we close up with. First question: what's next for you?
I'm looking for more deals. I'm actively looking at the market. I think this has been amazing. So I'm got some LOIs already out there
Mhm.
and actively looking for deals.
Nice. As are we. As are we. Hopefully, we'll have some good news here soon on one. Now, as I told you before, no pressure. This is the question you got to nail. What advice would you give an aspiring investor 6 to 12 months behind you?
Don't give up. Whatever you do, just keep putting the hours. Don't compare yourself with anybody else. Your pace is your pace. And do the underwriting, do the calling, and let people know that you're doing this. So when you have to raise the capital, they already know.
Nice. I love it. And last question for you: how can listeners learn more about you?
My email is mhmultifamily@gmail.com. You can also find me on Instagram as Hans Seelinger. And you can give me a call if you want at 786-384-2456. I would happy to talk to you and share our real estate journey.
Awesome. And thanks so much for coming on this show today. Very much appreciate your time.
Brian, thank you so much for inviting me. It's been a pleasure. I really had some fun today with you, and I hope this adds value to anybody who's listening. Keep on the work and don't quit.
Don't quit. Don't give up. Don't ever give up. All right. Thanks, Hans. Hey, if you like that episode, make sure you hit that subscribe button. But more importantly, if you haven't joined our multifamily educational community, the Tribe of Titans, yet, you are missing out. So get yourself 30 days free by clicking the link below in the description, or go to thetribeoftitans.info, and we'll see you there.